Hey everyone, and welcome back to the Deep Dive. Today we're going to be tackling a topic that's pretty much always on everyone's mind in the crypto world. Always. Volatility.
Oh, yeah.
So we've got some awesome research lined up today
Yeah.
to really dig into not just, watching the price charts go crazy, but really understanding how can we actually measure volatility in crypto?
Right.
And then more importantly, how can we use that to our advantage?
Totally agree. You can't just look at the charts and freak out.
Yeah.
You have to be able to make sense of it all.
So I think a lot of people hearing this might be thinking, well, can't we just use the VIX?
Right.
The fear gauge
Yeah.
that they use in the stock market. But our sources are saying that trying to apply the VIX to crypto is kind of like trying to fit a square peg in a round hole.
Yeah, that's a good way to put it. The VIX or Volatility Index, it's great, for the stock market.
Yeah.
It measures those expectations of future volatility in the S&P 500 based on options prices.
Right.
But crypto's a whole different beast.
Totally.
Totally.
Centralized.
Influenced by all these unique factors that don't even apply to stocks.
Right. So trying to measure crypto volatility with the VIX, it's just not going to give us an accurate picture. Like trying to measure the speed of a cheetah with a snailometer.
Exactly. And luckily, there are folks out there who've built tools specifically for crypto volatility.
Yeah, and that's what we're going to dive into today. But before we get all into the nitty-gritty of, these different measures, I think we should take a step back and really understand why this even matters in the first place.
Oh, for sure.
Like, why should we even care about measuring crypto volatility?
Yeah, it's more than just numbers on a screen.
Right.
Let's say you're really interested in Ethereum and suddenly overnight the price drops 10%.
Yeah.
What do? Do you panic and sell?
Right.
Or hold on for dear life?
White knuckles.
Yeah, exactly. Understanding volatility can help you make a much better decision in these moments.
So you can have a plan instead of just reacting emotionally.
It's all about having a strategy, knowing your risk tolerance.
Whether you're a long-term holder or a day trader, you got to understand this stuff.
Exactly. Manage that risk and maybe even maximize your gains.
All right, so let's get into the good stuff. Our sources are pointing to the Crypto Volatility Index, or CVI, as a key tool for measuring volatility in the crypto market.
Love it.
Can you break it down for us? How does this CVI actually work?
So the CVI, it takes into account all those special things about crypto, the 247, trading the decentralized exchanges, all that.
Yeah.
It's built to give us a way more accurate picture of volatility than we'd get by trying to use something like the VIX.
So it's like it actually speaks the language of crypto.
Exactly.
Instead of trying to force fit something from a completely different world.
Yeah.
But what if we want to get even more granular? Our research mentions a few other metrics that might be helpful.
Okay.
Let's start with historical volatility, or HV.
All right.
Kind of think of it like looking in the rearview mirror of the market.
Yeah, that's a good analogy. HV basically analyzes past price swings to give you an idea of how volatile a certain crypto has been over a certain period of time.
So for example, if I see that Bitcoin has historically had like a surge in volatility every December,
Right.
that might make me think twice about, buying more in November.
Exactly. HV can really help you understand the seasonality of the market.
Interesting. It makes me wonder though, how do traders try to predict future volatility, not just look at the past?
Well, that's where we get to a measure called implied volatility, or PHI.
Okay, gotta admit, 5E sounds kind of like mind reading to me.
Ha!
How do we imply volatility?
Not quite mind reading, but it's kind of tapping into the wisdom of the crowd.
Okay.
5E comes from options prices,
Yeah.
and it basically shows what traders are expecting future volatility to be.
Oh, so if they're willing to pay a premium for options on a certain crypto,
Yep.
it means they're expecting higher volatility.
Exactly. And if the options are cheap, well, it suggests they're expecting lower volatility.
It's like peeking into the market's mood.
It's a powerful tool for sure.
So we've got HV looking back and IV looking ahead.
Right.
What about just understanding those day-to-day fluctuations? That seems pretty crucial too.
Oh, absolutely. And that's where average true range, or ATR, comes in.
Okay.
Think of it like the average daily price fluctuation of a crypto.
So if I'm looking at a crypto with a high ATR, I know to expect some big price swings.
You got it. And a lot of traders use this to set stop-loss levels.
Stop-loss levels.
Yeah, it's like a safety net.
Okay.
A stop-loss order automatically sells your crypto if the price drops to a certain point that you set.
So if I'm worried about a sudden drop, I can set a stop-loss order to, limit my losses.
Exactly. ATR can help you figure out where to set that stop-loss based on those typical daily price movements.
Wow, that's super helpful.
Yeah.
Seems like understanding all these different measures could be good for anyone in crypto,
For sure.
whether you're a total pro or just starting out.
Totally. Knowledge is power, especially in this space, and understanding volatility can help you make smarter decisions no matter how you invest.
This is all incredibly insightful. I'm already feeling a little more confident about navigating those ups and downs of the market.
That's great to hear.
But I am curious, how would a long-term holder use these measures differently from, say, a short-term trader?
That's a great question and something we should definitely dig into.
Yeah.
Someone who's in it for the long haul might focus more on that historical volatility and the big picture trends,
Right.
while someone who's day trading might be more into ATR and implied volatility to make those quick decisions.
Makes sense. It's like each type of investor has their own set of tools in the volatility toolbox.
Exactly.
Speaking of tools, our sources mentioned this platform called Morpher's Market Insights.
Oh, yeah.
Have you ever used platforms like that for gauging volatility?
I have those platforms. Like Morpher can be really helpful, especially if you want to go deeper.
Yeah.
They take data from tons of sources and give you insights you wouldn't be able to get on your own.
So it's like having a research assistant just for your crypto journey.
Exactly. They do a lot of the work for you.
That's fantastic. So far, we've established that, the VIX isn't the best fit for crypto volatility, and we've looked at some alternatives like the CVI, HV, ATR, and FIVM.
Right.
Each giving us a different perspective on how much a crypto's price might jump around.
And as we've seen, understanding these tools can be super valuable for making good decisions, managing risk, and maybe even boosting your game.
Absolutely. But we've only scratched the surface. In the next part of our deep dive, we'll explore how to actually apply these volatility measures to your own crypto strategy. Stay tuned. All right, so welcome back to the deep dive. Before the break, we were really getting into how to measure crypto volatility.
Right.
We talked about that Crypto Volatility Index, the CVI, and how it's really like custom made for the crypto world.
Yeah.
We also explored historical volatility, implied volatility, and average true range.
Yeah. It's like a whole toolbox of metrics
It is.
to help us understand, how much a crypto asset's price could move around.
It's like we've got these special glasses that let us see the market in a totally new way.
Oh, I love that analogy. Now, I know we've thrown a lot of information at you,
Yeah.
but it's important to remember that this isn't just about understanding abstract concepts.
Right.
It's about actually using these tools
Yes.
to make better decisions in the real world of crypto.
Absolutely. And the way you apply those tools is going to be different depending on, your style of investing and your goals.
Okay, so let's try to put these tools into action.
Okay.
Let's imagine we've got two different investors listening to this deep dive.
Right.
We've got Maya, who's a long-term holder.
Okay.
She believes in the future of crypto.
Yeah.
She's comfortable holding her investments for years, even if there are some ups and downs along the way.
Right.
Then we've got Alex, who's a day trader,
Right.
looking to, capitalize on those short-term price movements.
Got it. So let's start with Maya, our long-term holder.
Okay.
For someone like her, understanding historical volatility seems like it would be super crucial.
It would be.
Can you walk us through why?
So historical volatility can help Maya ride out those dips that are just bound to happen in the crypto market.
Right.
Let's say she's thinking about investing in Bitcoin.
Mm-hmm.
If she looks at the historical volatility, she might notice that Bitcoin has had some, big corrections in the past.
Yeah.
But it always bounces back stronger.
So it gives her that long-term perspective
Right.
to keep her from panicking and selling based on one day's price movement.
Exactly. It's about having that roadmap.
Yeah.
That shows her the twists and turns the market has taken before.
I see. So it kind of gives her a sense of the bigger picture.
Yes.
And helps her stay the course.
Yeah.
Even when things get a little crazy.
Exactly. Now, for someone like Alex, our day trader, average true range or ATR would be really key.
Okay. Now remind me, how does ATR work again?
So ATR basically gives us a sense of how much a crypto asset's price typically moves, up or down in a single day.
Okay.
It's like understanding the breathing room of that asset.
Gotcha. So how would Alex actually use that information?
Let's say Alex is looking at Ethereum.
Yeah.
And its ATR is $20.
Okay.
That means on average, you could expect the price to swing up or down $20 in a day.
Whoa, that's a pretty big swing.
It is, and that info would be super helpful for Alex when he's figuring out, when to buy and sell.
Right.
It can also help him set stop-loss levels.
Okay, remind us about stop-loss levels again.
So a stop-loss order is like a safety net.
Yeah.
It tells your exchange, hey, if the price drops to a certain level, just automatically sell my crypto.
Gotcha. So in this case, if Alex buys Ethereum at, say, $1,800,
Yeah.
he might set a stop-loss order at like $780 just below that $20 ATR.
Exactly that way. If the market suddenly takes a dive, his losses are limited.
That's smart. So understanding ATR can help traders manage their risk.
It definitely can, especially in the fast-paced world of day trading.
Right. Every bit of information helps.
For sure.
Okay, so we've talked about Maya, our long-term holder, using historical volatility.
Yep.
And Alex, our day trader, using ATR.
Right.
What about implied volatility?
Okay.
How would they each use that one?
So implied volatility can be helpful for both types of investors,
Okay.
but in different ways.
Gotcha.
For Maya, a sudden spike in implied volatility might be a sign that something big is about to happen, like a major announcement or event.
So it's like a warning sign.
It could be. It might make her a little more cautious.
Okay, so it helps her kind of gauge the mood of the market.
Yeah, exactly. Now for Alex, our day trader, high implied volatility might actually be a good thing.
Oh, how so?
Well, if he sees options traders paying a premium for options on a certain crypto, it suggests that they're expecting a big price swing.
Right.
So he might see that as a chance to make some profit.
Oh, interesting. So it's all about perspective.
It is kind of like knowing that a storm is brewing and deciding whether to, take cover or ride the waves.
Ooh, that's a great analogy. So implied volatility can be useful for both Maya and Alex.
Exactly.
But in totally different ways.
Yep. It all depends on your goals and how you like to invest.
This is all so fascinating. It feels like we're starting to see the crypto market with new eyes.
I'm glad to hear that.
But I know some people listening might be feeling a little overwhelmed with all this info.
Right.
Any advice for someone who's just starting to wrap their head around volatility?
Yeah, I would say start with the basics.
Okay.
Focus on really understanding, those different measures of volatility and how they work.
Yeah.
Then think about yourself. Are you more of a long-term holder like Maya?
Right.
Or a day trader like Alex? Once you know that, you can start to figure out how these different metrics fit into your strategy.
Makes sense.
And don't be afraid to experiment a little, see what works for you.
It's like learning a new language. You don't have to be fluent right away.
Exactly.
Just start with the basics.
Right. And there are tons of resources out there to help you learn.
Yeah.
Articles, videos, podcasts like this one.
Oh, of course, shameless plug. Speaking of resources, we mentioned earlier this platform called Morpher's Market Insights.
Yes.
Can you tell us a little more about how those kinds of platforms can be helpful?
So platforms like Morpher can be really great, especially if you really want to dig deep into volatility.
Okay.
They gather data from all these different places and give you insights that would take forever to find on your own.
So it's like having a team of analysts working for you.
I like that analogy.
Behind the scenes.
Yeah, they can help you visualize trends, compare different metrics, even backtest your strategies using historical data.
Wow. That's really cool.
Yeah.
Sounds like a great tool for anyone who's serious about this stuff.
It is.
Okay, so we've covered a lot here.
We have.
We've talked about why understanding volatility is so important.
Right.
We've looked at different ways to measure it.
Uh-huh.
And we've even started thinking about how to apply these ideas to different investment styles.
Exactly. And we've learned that whether you're in it for the long haul or just playing the short game, understanding volatility can make you a smarter investor.
Absolutely.
Yes.
Now, in the final part of our deep dive, we're going to shift gears and get really practical.
Okay.
We'll explore some specific strategies for actually managing volatility.
All right.
And hopefully maximizing your chances of success in this crazy world of crypto.
Sounds good.
So don't go anywhere. All right, welcome back to the deep dive. We spent this whole episode talking about crypto volatility.
We have.
How to measure it, what it even means, and how different investors might think about it.
Yeah.
But now let's get practical.
Okay.
How can our listeners actually manage volatility and make it work for them?
That's the million-dollar question. And luckily, there are some strategies you can use no matter how much experience you have.
That's good to hear. So let's say I'm feeling a little overwhelmed by all this volatility.
Right.
What are some, basic things I can do to protect myself?
Well, one of the simplest but most effective strategies is diversification.
Diversification. So that's like spreading your investments across different assets.
Exactly. Don't put all your eggs in one basket, right?
Right.
So instead of just going all in on one crypto, you spread your investment across a few.
Okay.
That way, if one takes a hit, the others can kind of help soften the blow.
So it's like a safety net for your portfolio.
Exactly.
What else can we do to manage this volatility?
This might sound a little counterintuitive, but dollar cost averaging can be really helpful.
Dollar cost averaging. Now, remind me, what's that again?
Basically, you invest a set amount of money.
Okay.
at regular intervals no matter what the price is.
Okay.
So let's say you decide to invest $100 in Bitcoin every single week. Some weeks you'll be buying when the price is high, other weeks it'll be low.
So it kind of averages out over time.
Exactly.
Yeah.
It helps you avoid that risk of buying a ton when the price is at its peak. Right before it might drop.
Yeah, that makes sense.
And it's a great way to take the emotion out of investing.
Oh, that's good.
You're not trying to time the market perfectly.
Yeah, just consistently putting money in.
Exactly.
I like that a lot, especially for someone who wants to be a little more hands-off.
It is. And it can be super useful in a market like crypto, where prices can change so quickly.
Totally. Okay, so we've got diversification, we've got dollar cost averaging.
Yeah.
What other strategies should our listeners be thinking about?
This one's a bit more advanced, but learning about options trading could really change the game.
Okay.
Options contracts give you the right, but not the obligation to buy or sell a crypto at a certain price on a certain date.
That sounds a little complicated. Can you give me like a super simple example?
Sure. So let's say you think Bitcoin's price is going to go up.
Okay.
You could buy what's called a call option, which gives you the right to buy Bitcoin at a specific price in the future.
Okay.
If the price does go up, you can exercise your option, buy it at that lower price, and make a profit.
So it's a way to potentially make money from the volatility.
You got it. But just remember, options trading can be risky.
Right.
It's important to do your research and understand how they work before you jump in.
Absolutely. Not something to just mess around with.
Nope.
So we've talked about some specific strategies for managing volatility.
We have.
Any final words of wisdom for our listeners as they navigate the crypto market?
I think the most important thing is to stay informed.
Oh, wow.
Keep learning about these different volatility measures.
Yeah.
Explore the different strategies and find what works best for you.
Makes sense.
Remember, knowledge is your best friend in the crypto world.
So true knowledge, diversification, a little bit of patience, and maybe some options trading if you're feeling brave.
That sounds about right. It's a recipe for success in the crypto world.
Well said. Thank you so much for sharing your expertise with us today.
It was my pleasure.
And to all our listeners, thank you for joining us on this deep dive into crypto volatility.
Yeah.
We hope you learned something new and feel a little more confident about navigating the market.
Absolutely.
Remember, volatility is just part of crypto.
It is.
But it doesn't have to be scary.
Nope.
With the right knowledge and strategies, you can make it work for you.
You can.
Until next time, stay curious and keep exploring the amazing world of crypto.